For more on this right now, I want to bring in Ron Epstein. He is Bank of America Securities senior aerospace analyst. He just interviewed the Boeing CFO. So, Ron, let's talk through what you heard there. Phil mentioned that free cash flow guidance. Was that a surprise to you?
Yeah, it was probably a little bit worse than I was thinking. And my sense is it's probably a little bit worse than maybe what consensus was thinking. When you flow that through the year, what Brian did say was low single-digit free cash flow generation for the year. I think if you look at consensus numbers, it's higher than that. So folks are going to have to adjust the numbers down. One of the things that Brian did talk about is traveled work. He mentioned it many, many times, and that's work that is done out of position. One of the big topics of conversation was really around this focus on moving airplanes through the factory, shifting to doing it right, and then pacing yourself at making sure that everything gets done right.
I'm not sure I understand that moving the plane through the building. There was stuff that was not getting done in the right place.
Yeah, the focus was on just getting the tempo of moving, just keeping the airlines going, keeping the airplanes going through the building,
whether the work's done or not.
Yeah, exactly. And you had a lot of out of position work. Yeah.
That sounds like a really big problem. I'm surprised it took this to kind of figure that out.
Yeah, I mean, you're not the only one. So I mean, they're doing a reset. He was very clear. Production rates are going to stay below 38 until they get it figured out. We're looking for an average of about 37 aircraft per month for the year. We'll have to review our model, but most likely the risk is to the downside on that. And then he also mentioned...
Ron, what if the answer is just that you can't say we're going to get 50 because that requires moving the plane through faster than you can get the work done? We're going to get it figured out. Maybe you can speed it up a little. What if you don't get to 50 airplanes by 2025 or 26?
Yeah, it'll just take longer, right? I mean, can you get to 50? Sure, but it might take more investment. It might take some automation. It might take more people. So 50 is an achievable target. It's just how do you get there, and what investment is going to be required to do so. And then the other point that Brian did bring up is they're going to have to work with their customers in terms of airplanes are going to be delivered later in some cases, shifting airplanes around. Some customers that wanted 737-10s might get 9s or 8s. So there's a lot of juggling that's going on. But, I kind of, I view what, Brian said today as kind of a refreshing reset, just saying, okay, this is where we are. This is what we're going to do. And this is going to take some time.
If they're going to need investments to do automation, to add additional lines, whatever that might be, to get up to speed, to be able to get to 50. What do you think the investments are? How much will it cost? And will they still be able to do that and do all cash to buy back Spirit Aerosystems? Is there enough cash flow there to go around?
Yeah, so what Brian was very clear about is they want to maintain their investment grade rating. So in order to do that, they would fund their deal with cash and debt, that they wouldn't do an equity deal to do Spirit if Spirit were to happen. And then in terms of funding, what would be required to go to 50 if they need to add, to the capital base to do that, they would have to fund that somehow too. And don't forget, I mean, they've got about $50 billion of debt on their balance sheet. So kind of any way you look at it, it's going to be a tight time from all the requirements that the company has to hit.
If this was a little worse than you were expecting with some of the guidance given, you already had a neutral rating on the stock. Do you downgrade it?
Yeah, I mean, I can't really talk about that here, Becky. You know that. We're always reviewing our models and kind of going through things. Now, the tension with Boeing is, you've had these execution issues, but you have a very robust market for commercial airplanes. And at the moment, there's really only 2 companies that supply the airplane. So my sense is among investors, and this is where it gets tricky from a stock performance perspective, investors are looking for value-oriented plays in commercial aerospace. And my sense is if investors can get comfortable that Boeing will get itself on the right track, that could support the shares. So that's something we're always thinking about and working on.